kick things off with a general overview of Open stock's recent performance. Over the past 3 months, Open has delivered an astonishing rally, climbing from just over 0.55 to a recent close of 8.23. That's a jaw-dropping increase of about 13.74%. The stock's upward momentum has been especially strong in July and early September, with a standout moment when it leaped from 5.86 to 10.52 in a single day. This sets the stage for a deeper dive into what's driving these moves and what traders should watch for next. Open's growth story is nothing short of remarkable. The stock's price action has been characterized by higher highs and higher lows, a classic sign of a bullish trend. However, this rapid ascent hasn't come without volatility. Sharp price swings have been the norm, keeping both traders and investors on their toes. After peaking on September 11th, the stock entered a consolidation phase, closing at 8.23 on September 24th. This pause is typical after such a steep climb, as the market digests gains and reassesses the next move. One of the key factors supporting Open's price surge has been trading volume. On days with significant price movement, volumes have soared into the hundreds of millions. For example, on July 17th, when the stock hit a high of 4.97, volume reached nearly 1.9 billion shares. Similarly, on September 11th, as the stock closed at its highest point of 10.52, over a billion shares changed hands. High volume on big move days confirms strong market interest and validates the trend. After the explosive rally, Open has entered a period of consolidation. This means the price is moving sideways with less dramatic swings compared to previous weeks. Notably, the recent consolidation has occurred on lower trading volumes, suggesting that momentum is cooling off. This phase often precedes the next significant move, as traders wait for new catalysts or confirmation of the trend's direction. Let's talk about moving averages, which help smooth out price data and highlight trends. Currently, Open's price sits above its medium and long-term moving averages, reinforcing the bullish outlook. However, it's just below some short-term averages, hinting at possible short-term weakness. The 5-day and 10-day simple and exponential moving averages are slightly above the current price, while the 20-day and longer-term averages remain well below, confirming the strong long-term trend. Despite the overall bullish trend, there are signs of short-term weakness. The 5-day SMA and EMA as well as the 10-day SMA are all above the current price. This suggests that while the long-term trend is intact, the stock may be experiencing a temporary pullback or pause. Such periods are common after rapid advances and can offer opportunities for new entries or profit-taking. Looking further out, the 200-day SMA and EMA are both well below the current price. This is a strong signal that the long-term trend remains bullish. When a stock trades above its long-term moving averages, it often indicates sustained investor confidence and the potential for further gains, provided the broader market environment remains supportive. Momentum indicators are giving mixed signals right now. The MACD has turned slightly bearish in the short term with a negative histogram. Meanwhile, the RSI, Williams %R, and MFI are all in neutral territory, suggesting the stock is neither overbought nor oversold. This neutral stance means the stock could move in either direction depending on upcoming news or market sentiment. Stochastic indicators are also sending mixed messages. The stock K and stock D values suggest some bearish pressure, while the commodity channel index CCI remains neutral. The rate of change ROC shows some price momentum, but it's not as strong as before. These indicators reinforce the idea that the stock is in a consolidation phase with no clear short-term direction. Despite mixed momentum signals, trend indicators remain robust. The ADX is above 54, indicating a strong trend. The Arun up is at 80, while the Arun down is at just 4, confirming the dominance of the uptrend. The oscillator value also supports this view. These readings suggest that overall the bullish trend is still in play even if the pace has slowed. Linear regression analysis offers another perspective. The positive slope of 0.1386 confirms the upward trend, and the R-squared value of 0.8287 indicates a strong correlation between time and price. The current price of 8.23 is slightly above the predicted value of 8.08, suggesting the stock is outperforming the model's expectations. This is a positive sign for bulls, but also a reminder that the stock may be due for a breather. Open's volatility is another key factor to watch. The stock is currently trading between the middle and upper Bollinger Bands, which suggests neutral to slightly bullish conditions. The average true range ATR is over 1.18, indicating that large price swings are still possible. High volatility can create both opportunities and risks, so it's important for traders to stay alert and manage their positions carefully. Volume-based indicators are sending mixed signals. The Chaikin oscillator is deeply negative, pointing to some selling pressure or distribution. On the other hand, on-balance volume OBV remains in an uptrend, reflecting overall accumulation over the past months. This divergence highlights the importance of monitoring both price and volume for a complete picture. Looking ahead to the next trading day, the recent consolidation and neutral momentum indicators suggest that Open might open around its current close of 8.23 or perhaps slightly lower. A reasonable estimate for the opening price would be in the 8 to 8.3 range. This outlook reflects the current balance between bullish long-term trends and short-term caution. Support and resistance levels are crucial for planning trades. Immediate resistance sits at the recent high of 10.7, with secondary resistance around 9.495 and the 5-day SMA at 8.642. On the support side, key levels are 7.31, 6.91, and the 20-day SMA at 7.2502. With the current price closer to resistance, traders should watch for potential tests of these levels in the coming session. For intraday traders, expect range-bound trading with notable volatility. The stock may open near the previous close, test resistance levels, and possibly pull back to support if selling pressure increases. The ATR suggests a potential high of 9.41 and a low of 7.05 if the stock opens at 8.23, but actual swings could be even wider if a breakout occurs. Bullish breakout could see open surging above consolidation, testing resistance at 8.64 or even higher. This scenario would likely be supported by renewed volume spikes and a return of bullish momentum. Traders should watch for strong moves above resistance as a sign that the uptrend is resuming. On the flip side, a bearish breakdown could see the stock falling below consolidation, testing support at 7.31 or lower. This might happen if profit-taking accelerates after the recent run-up. Watching for a drop below key support levels can help traders manage risk and adjust their strategies accordingly. A third scenario is continued consolidation, where the stock trades in a range as the market digests recent gains. This can be a healthy pause, allowing traders to reassess and new buyers to enter. Range-bound trading often precedes the next major move, so patience is key during these periods. Given the high ATR, wide price swings are possible within a single trading day. The stock could test both support and resistance levels, creating opportunities for active traders but also increasing risk. It's important to use stop-loss orders and manage position sizes to navigate these volatile conditions safely. Wrap up: Open stock has delivered extraordinary performance, with a strong long-term bullish trend and massive price appreciation. However, the recent consolidation and mixed short-term signals suggest caution is warranted. Neutral readings on key indicators mean the stock could move in either direction. Traders should focus on risk management, using stop-loss orders below support and considering partial profit-taking at resistance. Staying disciplined and prepared for volatility will be key to navigating the next phase of Open's journey.